Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod, Happy New Year's Eve.
It has been a year of a lot of superlatives.
AI is taking your job, probably. A modest proposal from Khan Academy founder Sal Khan about that particular employment apocalypse. He wants companies to pay up for the workers they cut.
If folks wait too long, the political winds are going to switch.
The year in retail. Several brand names will be under new leadership in 26. Our Courtney Reagan on where the retail stocks end this year.
So sort of a stealth rally there right at the end.
And former Walmart U.S. CEO Bill Simon on the winners and losers in the year of the tariff.
We were able to really see the big guys, Walmart, Costco, Amazon, find ways to digest the tariff news and really to, push back on the manufacturers and get some assistance there.
But first, it is the last day of headlines for 2025. Warner Brothers Discovery set to reject Paramount's latest bid for its assets. And it is Warren Buffett's last day leading Berkshire Hathaway. Don't worry, the Oracle will remain in Omaha.
Buffett still controls 30% of the vote in that company. He doesn't make bad deals.
It's Wednesday. It's December 31st, 2025. Already 2026 down under.
Tiny kangaroo down, sport. Tiny kangaroo down. Yeah, you know it.
Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square on New Year's Eve. This is not an easy place to get to on New Year's Eve, even at these early hours. By the way, I'm Becky Quick. Joe Kernen's here. Andrew is off today.
Yeah, I was ready to give up and just go home and get one of those screens Andrew always uses to make it look like he's here.
Hey, it is New Year's Day already in Auckland, New Zealand. You see the fireworks that are taking place. We're going to see that behind us a little later today, but those celebrations are kicking off around the globe today. It's going to be followed, what you're watching in Auckland, New Zealand right now, by a scaled-back celebration in Sydney, Australia. That will take place at 8 a.m. Eastern time to this morning here. A fireworks display and a concert at Bondi Beach were canceled after the shooting there earlier this month, although the traditional fireworks display at the Sydney Harbour Bridge is still on schedule again for 8 a.m. Eastern time. Here in Times Square behind us, this is the most locked down I have ever seen it in the many years that we've been coming here. It was pretty tough to get in, even in the pre-6 a.m. hours.
We're calling it a shooting, are we? The terrorist attack in Bondi, yeah.
Well, the terrorist attack.
Yeah,
Correct,
exactly. There's a shooting there.
Yeah, it was an attack, and it does have everyone on heightened alert as we head into this season.
I'll say.
Things are quiet, things are locked down here, and there's a huge police presence, not just in the immediate Times Square area, but just everywhere you went as you went through Manhattan this morning. With the backdrop to all of this, that we're watching the markets on this last trading day of the year. What a year it has been for the major averages. They are all up for the year. The Dow up by close to 14%. The S&P is up by more than 17%, and the NASDAQ up by 21%. Then you've got the Russell 2000, which is up by just over 12%. All of the major averages are on pace for their sixth positive year out of the last 7. It has been a good time for investors these last 7 years, but it has been a year of a lot of superlatives.
Yep. And next year starts with a superlative because we're going to spin off. And I think doesn't that happen on
Versant.
Versant on Monday starts trading. I think we're bringing the
opening bell.
The opening bell. And if you've ever spun off from a big company and gone to a small, there are a lot of things that go on. Do you know what?
I mean, it's the font.
Do you know what I? No.
Do
you know what I just did? You know what I just did? No one's going to know what I'm talking about except for you.
Okay. Well, share. We're here together.
I put my message bar back in.
Oh, I can't find mine.
I just did that. I can do it for you.
Let's see.
No, I'll show you how to.
This is our messaging system internally.
Internal, and something changed on this whole thing, and so we're unable to communicate because I had no message bar, and I actually went into whatever I did.
Just did it. Found it.
So it wasn't that hard. Silver rebounded a little bit yesterday after a big drop on Monday, but we're talking, it was $80, down sharply again this morning all the way to 71. I don't know where this deserves to be. We had a guy on yesterday that said, maybe not a round trip, but some of these levels just don't make any sense, and they're related to technical things. But maybe it was, it was dormant for so long. Maybe a lot of it is catch up. But supposedly, in his view, wasn't as related to gold as it was related to silver's own dynamics and fundamentals.
Weird when they happen together, though.
It is, and copper too. But remember, exchange operator CME, as they do whenever things get crazy like this, they raise margin requirements on precious metals futures. Now, this is the second time in a week. China is also about to tighten controls on silver exports, echoing the country's stance on rare earth metals, and platinum, palladium also getting hit. If you're following this, silver's up 143% year to date. That's the best year since 1979. Can you say Hunt Brothers? Gold up more than 60% this year, also on pace for its best year.
See, they can say they're not related, but when they move in tandem like that, it's hard to.
Silver was up even more than
gold. I think
understood.
Gold was up like
gold
50%,
I understood.
maybe. I think silver's been up close to 145% for the
gold had that long. For a long time, the gold bulls were, they kind of looked, kind of looked silly for a long time. They've been rewarded for their patience.
Yes, they have.
Yes, they certainly have. But when they really laugh at Bitcoin, I know maybe Bitcoin goes to zero eventually, but when they compare, they say, I've had people writing in, see, we told you.
Bitcoin's on track to potentially close higher for the year. It's pretty close.
But it was, there were people when Bitcoin was at $2,000. There are these, very vociferous voices that it'll never get to 5,000. Gold's going to go to, and it went to 125,000, and gold finally made it to 4,500, and they're declaring victory, which is, whatever.
It's all the time frame.
Right.
It's all the time frame when you got in. We could get the next development in the fight over Warner Brothers Discovery as soon as today. David Faber reporting that the company is expected to release its formal response, rejecting the latest offer from Paramount Skydance very soon, potentially either today or Friday. That's despite a personal guarantee from Larry Ellison, the father of Paramount CEO David Ellison, backing Paramount's offer. A rejection would keep Warner Brothers in line to take a more than $80 billion cash and stock offer from Netflix. But this is going to be interesting. The last time around when they rejected it, David Faber had the chairman of the board on, saying that the reason they were doing it is because there was no personal guarantee that came. Now, I don't know what the personal guarantee is, if it's been put out in writing, or what the rationale will be for why this is less this time around, but I guess we'll see very soon.
The reason I like it, for me, Al Franken, is that the Joe Kernen, you say that all the time on this, and it only has to do with me,
Okay.
If you were to value the stub of the
I know where you're going with this.
Exactly.
Right. You want a big valuation for the cable properties because Versant is going to be the trading.
So if it really is worth 4 or 5 times,
I'm with you. I'm with you on that. I was thinking this morning on the way in, that this is going to be
a trading
proxy.
We got a quarter of the debt of the Warner spinoff, and we're coming valued at like 1.5. And
we have CNBC.
And we have Squawk Box.
Yeah.
And like I said, it's all about me, but us. But if that's the only way you can get the Netflix offer to match Paramount is by valuing those cable assets.
We had somebody
spin off at a much more, and that means Versant should be.
Maybe it's even more than $4. Maybe it's 5 or beyond.
Well, then Versant should be.
Was it
valued
Roger Altman or somebody who told us that recently?
VSN TV. If you
want to be watching on Monday for the opening bell. Today is Warren Buffett's last day as CEO of Berkshire Hathaway after 60 years. Buffett shocked Wall Street in May when he announced that he would ask Berkshire's board to replace him with Greg Abel as CEO at the end of the year. Buffett has led the conglomerate for 6 decades, but he won't be stepping away completely. He is staying on as chairman of the company, and he plans to continue coming into the office each day. In fact, he's there not only 5 days a week, but I think he comes in sometimes 6 days a week too, either a Saturday or a Sunday.
Amazing. Is it cherry Coke zero or cherry? Just
No diet,
on,
no zero,
full
full
on.
on. Yeah, he likes the full flavor.
I like
full
it too.
sugar. Coke.
I like it too, but
I drink Coke or cherry Coke either way.
yeah, I just can't. The 140 calories. If you run on a treadmill for like a half hour, it's like 120 calories. It's like I can't. It's not a fair
But
trade.
his record as an investor, what he's managed to do.
Unbelievable. He's changed the. Yeah, I mean, one man can change the world, and he certainly did in the way that you invest. And he's. I mean, how many people's lives has he enriched? Not just. I'm talking monetarily, but I'm sure in other ways as well. And he's going to leave a legacy of philanthropy that's going to help a lot of people as well. He's done a lot for the NCAA March Madness. I mean, he's done a lot.
For a lot of things. I mean,
He's given me a brick. I have a brick. I have
an Acme brick.
An Acme brick.
He's given away more than $50 billion
Yeah.
already. His plan is to give away more than 99.9% of all of his wealth.
Give me a lollipop.
Children are going to finish carrying that out for him.
Yeah, they will.
And Greg Abel is the person who Charlie Munger first kind of slipped at an annual meeting in May of 2021 to say that Greg would be the one who would be taking
He did
care
back
of
then?
culture.
Yeah.
So it was 2021 when he first slipped, but then it was this annual meeting, May of this year, when Warren Buffett surprised everybody in the auditorium by saying that he'd like to step down as CEO. Today would
Do
be
you
his
think
last day.
how much is it more oversight for the last since then? What is that? 4 years? Is it more oversight? Do you think they took anyone took ideas to him to get his blessing? They did still?
Well, I think not
Greg Abel?
internally. I think for the most part, Greg has been running a lot of the non-insurance companies for years now. That's been the way that they set it up. Ajit Jain has been running the insurance companies. Everybody reports through to Warren Buffett. But Greg has done a phenomenal job, really in the operations business of trying to make sure that things run smoothly. And a lot of the problems that Warren Buffett didn't really want to deal with were the things that Greg Abel's been dealing with. But they work together very closely, and I know they still talk constantly. So there is a lot of back and forth, and I think that's great for Greg Abel, too, to be able to have Warren Buffett as a fire shield to anybody who wants to come along and say that you're not Warren Buffett, this is not your company. Buffett still controls 30% of the vote in that company.
So what does this really mean?
He's got Greg Abel's back.
Today? I just wonder what if he has a strong feeling about something that's going on. I'm sure he, as a chairman,
I think he is trying to step back and let Greg do more and more.
More than step back more than he already has.
I think people are going to Greg with some of the deals on these things. I think Warren's phone is always there if somebody wants to come and call.
If you own 30%, you could still say I don't want to do that.
Yeah, but I think he's worked with Greg for a long time. He's been his chosen person for a long time, and I think he's very happy to see what Greg has done with the company over the last several years, too. And I think what you pointed out, his legacy is going to be much more than just Berkshire Hathaway, although that's a pretty phenomenal legacy in itself.
For anyone who's owned it.
$119 to $7,500. You're talking about gains of $3.5 million.
You could probably, with AI, figure out how many millionaires
he's created
from.
But I think it's also like his Thanksgiving letter that he wrote this year, talking about how you should behave in life, and kindness is an easy choice, and that's what you should really do. I think those messages are pretty important, too. He's got a huge following of people who admire not only what he's done in business and in investing, but what he has chosen to do in life.
He's kind unless you're on the other side of a negotiation. Because especially when he was younger, I heard he was just an assassin. Like he
doesn't make bad deals.
No,
I shouldn't say he doesn't. He does occasionally. But
I mean, ruthless. That's a bad word. It has a bad connotation. But
if you're spending your partners, he's always looked at the shareholders as his partners because it started out as a small group of family and friends. He's not going to overpay with.
I wouldn't want to be on. I wouldn't want to buy or sell anything to him.
I think there have been a lot of pretty good deals where people on both sides.
No, I'm sure. I'm sure. But
he's not going to overpay.
He hasn't.
Right.
No, and he hasn't been on the
Charlie Munger once made a really interesting point. He said there are all of these companies that want you to overpay, but only once when you pay for them, and then they want to make sure if they're getting paid in stock because that's more tax advantageous that you never overpay for another company.
Is he frugal? Again. I mean, he gave me a NetJets.
He just doesn't want anything.
He gave me a NetJets card, and
he lives in the same house he's lived in for.
But it wasn't good for
years.
it. It just had my name. There was nothing associated with it. That would have taken nothing for him to give me a, couple of million on the.
His plan with philanthropy has been trying to help the people who need the help the most, and you're not it.
No, unfortunately. I love NetJets. It's always somebody else's.
Ahead on Squawk Pod, corporate responsibility in the age of AI-driven automation with CEO and founder of education powerhouse the Khan Academy, Sal Khan.
India requires 2% of profits for corporate social responsibility. The UK already has 0.5% mandatory for reskilling. I'd argue most companies already do spend something like that, but they do it in their own silo.
We'll be right back. Welcome back. This is Squawk Pod. As always, from the crossroads of the world, Times Square.
Stand by, Joe. In 3, 2, 1, his mic cue.
You're watching Squawk Box on CNBC. I'm Joe Kernen, along with Becky Quick. Andrew is off today, and we should take a shot of
It's
we are
empty
here.
We barely made it in.
This is it. This is exactly where everyone is going to be wearing Depends tonight, because you can't. There's 2 million people, or whatever it is, no bathrooms, and it takes like 8 hours.
Once you leave, you can't go back out. They are saying you might even be frisked again through security.
This is the most I've ever seen. I had to get had to walk from 8th, which we're over on
Broadway.
Between Broadway and 7th. And that doesn't sound like a lot, but it was a maze. There are all these barriers that are closed, and at the very end of one of the barriers, there's a tiny little place where if I
slip through like a rat.
If I suck in my stomach, where I can just barely get through.
No, I had to rely on the kindness not of
How'd these
strangers,
guys
but
get
of the
here?
NYPD to get in this morning too. I don't know how they got in here because nobody else
is
has made
allowed.
it.
But there are police everywhere. They were pretty nice. Some of the cops.
There, New York's finest.
They didn't respond well to "Don't you know who I am?" I don't know what. Did you try that stuff?
They were far nicer to me.
You didn't use that.
Our next guest warns that an AI-fueled job apocalypse is on the horizon. Let's bring in Sal Khan. He's the CEO of the Khan Academy. In his latest piece for the New York Times, Sal makes the pitch that every company benefiting from automation should dedicate 1% of profits to help retrain workers who will be displaced by AI. Sal, first of all, thanks for being here. Second of all, this is a pretty radical proposal, but let's lay out what you think is happening. Why you think this job apocalypse is coming.
Yeah, as soon as generative AI became a big thing, obviously this has been a big debate. Will we have net loss jobs, net gain jobs? And living out here in Silicon Valley, most people have been on, hey, this is going to be like the Industrial Revolution. We'll just, there'll be jobs. We can't name them, but they'll happen. But what we're seeing now, in that op-ed, I talk about seeing the Waymos in my neighborhood, and that's cool. But then I go and meet with a friend who is thinking about contributing 1% of his firm's profits for reskilling. And his motivation was he's taken over a call center in the Philippines, and he's going to be laying off 80% of the workforce and replacing them with an AI. That's 7 to 10% of the Filipino GDP directly. Driving some form of a vehicle is 4 to 5 million workers just in the United States. It's one of the biggest sources of employment for men globally, including in the United States. And even if you look at white collar jobs, a lot of people are talking about and seeing what's happening in software engineering right now. It seems kind of frozen. Things like product management, design, we're seeing that those jobs are at least changing. You're not seeing a lot of net hiring. If anything, there's a lot of things going the other way. And the only way to think about how to navigate this, I think if folks wait too long, the political winds are going to switch. We've already seen that populism can get a lot of momentum off of things like globalization and immigration. I think automation is going to hit a lot harder. And 1% isn't without precedent. As I mentioned, one of my friends, he hasn't announced it yet. That's why I'm not naming their firm, but it's a major firm. There's Ares Capital, another major asset manager. They have a class of funds, several $1 billion under management, where they're giving 5% of their promote to philanthropy they're doing healthcare and education, but that's related to reskilling. So the pitch here is it's in companies' best interest. This isn't going to be just, hope isn't a strategy here. We have to get ahead of the curve. The benefits of doing something significantly weigh out the alternative. And I think if we don't do something, politics are going to take over, and that's going to be worse for everyone.
I hear what you're saying, and I've thought the same thing myself. We watched it with Occupy Wall Street and other movements in the past where people feel like they have no hope, where they feel like they've lost things. You definitely do lose the political wins. I think it's probably difficult to convince lots of companies to say, yeah, we're just going to take 1% of profits and give them to this, when many of them probably can't say, look, we're going to lay off a lot of workers as a result of this. I think what you're talking about specifically, a company that is going to give back 1% of profits after deploying an AI agent that's capable of wiping out 80% of call center jobs in the Philippines, that seems like a token you drop in the offering box on your way out of mass because you feel really bad because you've been so guilty. I don't know how we balance this out, but I think you're going to have a hard time convincing some of the biggest companies out there that they are really losing jobs. Even if you talk to somebody like an Amazon, they'll say, that's a situation where Andy Jassy has said if they're successful, they'll have more workers than they have in years past. I think that's what Jamie Dimon said specifically at JP Morgan. If we're successful, we're going to have more workers. They'll just be in different jobs. So I don't think you're ever going to convince a company like JP Morgan that they should be taking 1% of their profits and then giving it away like this. How do you see this playing out on a grander scale?
Yeah, I hope, and I do think that there could be a form of peer pressure here. And what you're saying is real. When I wrote the op-ed, most of the people who read the op-ed is, why only give 1%? 1% is nothing.
For that guy, if you actually feel like you're guilty for releasing an AI agent that's going to lay off thousands and thousands of workers, maybe you should cough up more. But other companies, I don't think will feel the same way about it.
No, I think that's the interesting thing. I think the public is already feeling that it should be a lot more. I mean, if you look at some of the comments of the New York Times article, the pitchforks already seem to be coming out. And this is before things have really gotten bad. We're still in a relatively good economy. On the other side, 1% isn't a trivial amount. I point out that, if you take the top 10 or 12 companies out there, that's over $1 trillion a year in profit. That would be a significant fund, $10 billion that you could deploy for reskilling, but you could do it for millions and millions of people. And I'm just saying, they don't do it voluntarily, and it probably won't be enough, but at least it's a start, and there'll probably be more that you want to do. It will become mandatory in some way. There's other governments, India requires 2% of profits for corporate social responsibility. The UK already has a 0.5% mandatory for reskilling. I'd argue most companies already do spend something like that, but they do it in their own silo. They do it for very...
That's what I was going to say. Some of these companies might do it if they feel like they have control over it and they think it's going to a good use for actual reskilling, but not necessarily throwing it into a government bureaucracy that they're not convinced will necessarily use it appropriately.
That's right. If this is something that still stays in the private sector, something that they can drive, something that can be nimble, because we know what the alternatives are going to be. In 4 or 5 years, you could see the pendulum swing. People become very anti-automation. They start taxing automation. They start taxing AI. There's already serious politicians talking about bans on automation and AI. That's going to be way, way more harmful. And even if they do increase corporate taxes and the government wants to do reskilling and spends tens of billions or even hundreds of billions, we know it's going to be slower and less efficient than doing it in coordination with private industry.
Sal, thank you. It's a lot to think about. We appreciate it, and I wish you a Happy New Year.
You too. Thanks.
Coming up, what's the new year? What does it hold for the retail sector? From new leadership to the health of the consumer. More on that next. Plus, Sydney, Australia is set to ring in the new year. We'll have some fireworks. While here at home, Times Square is getting ready for the ball to drop right at midnight. The ball's right above us right now, basically.
In fact, there's a brand new ball, and if you read all about it, the Wall Street Journal has a picture of it right on the front page.
Right above.
It's 12.5 feet in diameter. It weighs 12,350 pounds, 5,280 Waterford crystals in circular shapes and LED light picks. This is the brand new, the ninth sphere that they've ever had in the history of the New Year's Eve ball drop.
So Ryan Seacrest being interviewed yesterday, he goes, no one really listens to anything I say. I just have to smile, and we just got to make sure the ball drops at the right time. That's all he has to
like us.
Yeah, the only thing they need to worry about on that whole
markets go off at 9:30.
Dick Clark rockin'
You're listening to Squawk Pod from CNBC, today with Joe Kernen and Becky Quick.
All right, folks, this is a picture of Sydney, Australia, where we are about to see fireworks. It's about to turn midnight there. Here we go. They're late.
A little bit of a delay, maybe. Uh-oh.
Here it is.
There we
go. 20 seconds that they're coming down. You know, our clocks are right. They're running a little behind on this. Yeah, our clocks are definitely right.
It's like
8.
Oh,
Here we get to ring in 2026. And there you have it. It's time to play. Should old acquaintance be forgot? Here we are. The first, or actually not the first, Auckland, New Zealand, we watched 2 hours ago. Now you're watching Sydney, Australia. These are the fireworks, Sydney Harbor, ringing in the new year. And those are some beautiful fireworks. Yeah. Up next, Tokyo is going to be ringing in the new year. That comes at 10 a.m. Eastern time.
Is that just us with old lang syne?
Probably.
What did they do? Tie me kangaroo down? Sport? Do you remember that song?
Nope.
That was a huge hit.
Maybe
number
if
one.
you sang it, I would recognize
Tie
it.
me kangaroo down, sport. Tie me kangaroo down. Yeah, you know it.
Yeah, I do. All right, we're going to continue to watch these New Year's celebrations, but those are some great fireworks over the water. Taipei comes at 11 a.m. Hong Kong's fireworks were canceled after November's devastating apartment fire. At noon Eastern time, though, Bangkok, Thailand will ring in the new year. That will be followed by Dubai at 3 p.m. Eastern time. Athens, Greece will take place at 5 p.m. and, of course, much of Western Europe at 6 p.m. London's going to be celebrating at 7 p.m. and then right here behind us, midnight Times Square.
It's almost like you move across, you keep going west around the world, and it's just
it's coming every hour, just like Santa's
weird
sleigh.
Oh, that's right. That's right. We saw this on the 24th.
It's only been a week, and here we are following Chasing the Sun once again. What percentage of people abandoned their New Year's resolutions by February? Drum roll, please. Yeah, around 80% of people abandoned their New Year's resolutions by February. You made it a whole month. That's impressive. That statistic, by the way, according to Forbes.
Yeah, if you're interested in the subject, Journal's got a good one. A slightly better you in the new year. Your resolutions can become a reality if you set your sights embarrassingly low.
That's a good point.
That's what I'm going to do.
I set very realistic expectations.
So what's a realistic one?
I'm going to lose some weight in ounces.
There you go.
That can even be tough to hold on to.
I don't think I can do that.
That can be tough.
Right.
All right, retailers closing the book on 2025. Courtney Reagan joins us for the review of the sector's performance. Hey, Court.
Hi, good to see you.
You
Happy
too.
New Year. Well, the retail ETF, the XRT, gained about 8% this year. That is less than half the growth of the S&P 500. The iBuy retail ETF, that's more e-commerce geared, that did better, gained 16%. But after that massive sell-off and concerns about the impact of the April 2nd announced tariffs, which you can see really clearly in the charts, the damage, honestly, could have been much worse. The retail theme for 2025, in my mind, was two-headed. The resilience of the U.S. consumer in the face of economic uncertainty and the ability of retail to pull every mitigation lever possible to blunt the consumer impact of tariffs. Prudence by consumers is evidenced by some of the bigger retail winners this year. Dollar General, Five Below, both gained 79%. Wow. Dollar Tree up 65%. TJX up 29%. And Walmart gaining 23%. May not sound like a lot compared to the others, but that outperformed the broader market.
Yeah, not
pretty
to mention
good, right?
that off of the base it's working off.
Absolutely. Victoria's Secret gained almost 200% in the last 6 months. American Eagle gained traction with some well-timed marketing campaigns. Their shares grew 60%. And department stores Kohl's and Macy's, they also quietly made progress. Their shares up 45% and 31% respectively for the year. But UBS doesn't think the department stores will stay in the winner's circle. Sell ratings for both of those names into 2026. Target and Lululemon both shed significant market share under the weight of some internal mistakes. Both now getting new leaders. Target on February 1st, Lululemon TBD. Walmart, too, will see CEO Doug McMillon retire and John Furner take over on February 1st. And Jefferies tells investors it thinks the setup generally for retail is more constructive and the challenges for 2025 are improving. But stock picking will remain important. So Jefferies has Nike as its top pick on its turnaround and Shark Ninja second. it suggests shorting on running, while UBS puts on running top of its buy list. So there you go, a debate already, along with Ralph Lauren, TJX, Victoria's Secret, American Eagle, and pressured Deckers. They think is going to be a turnaround in 2026.
They put Shark Ninja in the retail category?
They did, yeah. I mean, it's consumer products.
Yeah.
They also have Planet Fitness on their list, which is sort of consumer. So their coverage is a little bit more broad than sort of that typical shoes, apparel, sporting goods kind of universe.
Yeah, there were some really big movers that kind of snuck up on you, as you said.
Really? I mean,
with some of those too.
Yeah, I mean,
you knew they were doing okay. I didn't realize they were 45%.
Right, 45% when you're looking at the S&P 500 up about 17%. So sort of a stealth rally there right at the end.
It's pretty great.
Yeah.
Court, thank you.
Thank you.
Join us now with a wrap on retail and what's ahead for consumers in the new year. Bill Simon, former president and CEO of Walmart U.S. And it's good to see you, Bill. Happy New Year.
Happy New Year. How are you?
I'm good. You got to watch. Were you when that unbelievable CEO just finally said he was leaving, and we didn't eulogize him, but because he's alive and he's young, but we certainly we're going to erect a statue or something for him. Did you watch that from afar and sort of marvel at the you'd have to say troubled waters that Doug guided that company through just to just incredible success?
Yeah, look, it was a serious transition 10 years ago, 11 years ago when Doug took over. Walmart was valued as a pure brick and mortar retailer, despite the fact that their digital business was growing, nearly as fast as Walmart's. And that's really the transition that he led them through, is having Walmart recognized as the innovative digital blended company that it is. And that's why I think the valuation's so high. Did an incredible job.
I mean, Amazon was, didn't do anything wrong, and other companies just fell in the wake of the power of Amazon and everything else, but not Walmart. I mean, they were worthy competition. I guess they started out with a pretty good, franchise, Walmart.
Yeah, look, scale and make $29 billion in operating income gives you a lot of flexibility, and they used it well.
Yeah, but not everybody did well. We don't need to go in to relitigate, some of the failures of other companies. But it's not like it was just going to happen without doing the right things, because there are other companies that showed you what not to do during that period.
Yep, exactly. They did a wonderful job. They did everything they said they were going to do and more.
Okay, well, let's talk in general. Who won last year, and who do you expect to win this year?
Well, I think scale is going to continue to win. I think the relative uncertainty that the whole tariff discussion brought forward. We were able to really see the big guys, Walmart, Costco, Amazon, find ways to digest the tariff news and really to, push back on the manufacturers and get some assistance there, use the distribution power. And they're increasingly starting to use technology and AI to help make their operations even more efficient. So they're able to better deal with some of the uncertainty going forward than some of the mid-range guys. And I think the big are going to keep getting bigger, and the smaller and the middle guys are going to struggle.
What's going to happen with not just malls, but I look at the flux in some of the most storied names in retail and department stores, and I'm trying to figure out what the Saks or Macy's or Bloomingdale's. What does the future look like there, and what's happening? What's changing so much? Is it all just? Are they missing the online digital side of things?
Well, I think it's a combination of things. You mentioned mall traffic. I think mall traffic in a lot of places is challenged, so they have some geographic issues to deal with. I think you've seen, some of them start to respond. I think Macy's had a couple of good quarters now. You've got guys like Dillard's who've sort of found a way to navigate through it. And then you've got guys who are just starting to figure it out. Kohl's has a leadership transition. Michael Bender's taken over there. He's a terrific leader, but they've got their challenges ahead of them. If you can't find a reason to be, then you're not going to be.
Do you dabble in, specialty retailers? Do you have opinions about all those things? Do you keep up with foot traffic? And who do you expect? If you were going to give me a list of companies to buy or for our investors, what do you like in 2026? Can you do that? Maybe you got a future in at Goldman Sachs or something.
Picking stocks, I don't know. I sort of look at the ones who are really beat down. I think Target's had its struggles. They've got a leadership transition, but I can't imagine in my mind how it could get worse, right? It only has to get better. So if I'm looking, I kind of like Target. And we talked about Walmart. They've done a really good job. But because of their transition, I love them as a company. From an investment standpoint, I might be on the sidelines on that one for a little while. In specialty, I think sporting goods had its heyday. So Dick's and Academy, I think, had a nice run. A little bit leery on those going into next year.
How about Costco or some of the other big names, Home Depot?
Costco's a beast. One of my favorite retailers of all time. I think they've just done a really good job consistently. I think their stock's a little bit beat down. I am a little bit worried about the demographic shift away from the big pack sizes in the club channel. We'll have to see how that plays out. But I think their valuation is pretty low, and they're somebody I'd be interested in. Home Depot's going to continue to go on as long as new home sales and home sales have been slow. I think we're going to see a rebound in the home improvement channel. So I kind of like Home Depot as well.
Anything? China's got gets a lot of play, a lot of talk about all their online businesses. Anything plus or minuses coming out of there for you, individuals? From an investment standpoint, I would stay away from it. For me, I don't really know. Nobody knows what's going to happen with tariffs and the Supreme Court ruling and reciprocal tariffs. It's going to be really interesting. We're in unprecedented territory from a retail and consumer standpoint. We've got upward pressure on prices from tariff and downward pressure on prices from technology and AI. Yep.
We've got population immigration changes affecting demand. And then we have the whole geopolitical situation and the election coming up, and who knows what's going to happen. So I think the consumer's been resilient. Their paychecks have been healthy because wages have gone up pretty substantially the last 3 or 4 years. And the consumer, I think, will remain buoyant. But from an investment standpoint, any number of things could happen.
I think I'd give you some money if you want to. Allocate some.
I'm here to announce the formation of my investment company, right?
You probably could. Did you? You didn't sell all your Walmart stock when you left the company, did you?
No, I sold some, bought some back, and I've been trading it.
What'd you get Doug for? Right now. You better get Doug something nice for Christmas.
he doesn't need anything. Trust me.
No, you're right. You're right. All right, Bill Simon, thank you.
Thanks, guys.
Okay. See you.
Doug carried around that list of the top 10 retailers of every decade. He wanted to make sure that Walmart was at the top of it.
Yeah.
And 11 years later, it certainly is. So, did it well.
Mm-hmm. We got 15 seconds. Wish everyone happy New Year. Happy safe
New Year, everybody.
Safe New Year.
We're looking at a very strong year for the markets. More importantly, we hope you are looking at a very strong year for your families, for your friends, and for your own health.
It's amateur night.
Very well.
It's amateur night.
It is.
Drink and drive.
We'll see you on Friday. Be careful and Happy New Year.
And that is Squawk Pod for today and for the year. Thank you so much for listening throughout 2025. Stick with us in 2026. Squawk Pod is produced by me, Katie Kramer, and Cameron Costa. For our anchors, Joe Kernen, Becky Quick, and Andrew Ross Sorkin, as well as the whole Squawk Box crew behind the sounds, we wish you a very happy New Year. We'll meet you right back here in January.